I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market extended its surge in the last week, with the S&P 500 now today trying to extend its streak to 5 straight record highs and 7 up days in a row. It was a week that saw rotating days of strong liquidity-driven tech stocks, then strong recovery stocks as the investors look for deals, value stocks, and push those stocks up, which have been driving the indexes ever upward. Investors drew hope early in the week from President Trump pushing the fast-tracking of a COVID-19 treatment, plus Apple surging over $500, and China coming out and saying China-U.S., they were in talks that were favorable on the continuation of the Phase 1 trade deal. Well, China is actually pretty far from fulfilling that agreement that they made, but still, the market looks for reasons to take hope on anything. Then later in the week, the bulls gained energy again. It was after the leaders of the Dow came out and said, well, they were going to reshuffle the Dow Jones Industrial Average because there was not enough tech representation in there. And they were moving in 3 new stocks and moving out 3 of the older stocks. And one of them that they moved in on the tech side is Salesforce.com, CRM. That stock on the news jumped 28%, and it lit a fire essentially underneath the rest of the tech stocks, which then pushed the Nasdaq up very, very strongly. And then came the rumors that did prove to be true that Fed Powell in his speech on Thursday would bring a policy change that would no longer target 2% inflation, but now look at an average inflation rate. Essentially, they're saying they're going to allow it to run hot. What is unsaid is that they have not been able to achieve a 2% inflation rate in the 11 years of this great experiment that they're in. And what is not said is that unemployment, which is over 10%, that they're expecting a more massive amount of money printing in order to try to get that down. And what is not said is that the unemployment rate, in order to get it to acceptable levels in this very, very crippled economy, that they are expecting to do that inflation will jump up very significantly, maybe well over 2% annual rate. If you look at the last couple of months of the CPI and the PPI, you can see that we are headed in that direction. And the Fed actually, as calm as they want to look, I think they're quite frantic. And they have absolutely no respect for seniors or savers because they don't care if they push your buying power up and raising inflation rate and essentially killing the value of the money that you have saved. They've been doing that now for the last 11 years, essentially holding up a crippled economy with very, very poor growth on the savers, giving them no money, no return on their investments, no return on their bond holdings, and of course many of them are almost specifically in bonds, and making their life much more difficult. But they were willing to do that, to put this all on the backs of those senior citizens with no qualms about it at all. Well, the bond market is probably already telling a story. As the longer dated 10 to 30-year treasuries on their auctions, it's been really, really poor, with record poor bid to covers and also large tails. Now, last week they sold the shorter end and seemed to do a little bit better on that. But overall, the treasury market is extremely weak. Yield curve is steepening, And that's going to be good for banks, and they're going to help the market the stock market stay solid for a little while. And the precious metals, after some brief correction, now are steadying and looking like they're about to have another launch to the upside. We'll show you more about that when we get into the short-term view coming up. If I had a dream, my dream is that the bond market punishes the Fed for their indiscretions. As they've moved from sound money policies before 1971, you can point right at Nixon on that, to a massively invasive central bank with fiat money being what rules the day, and the end of free markets, to now a full embrace of MMT. You don't know what MMT is? Well, they call it modern monetary theory. I call it modern monetary treachery. And it seems like the election coming up is not going to really matter, because no matter who is in there, Biden or Trump, we're going to have a Fed that is in alignment with some of the most radical policies we ever dreamed could be controlling our economy or controlling the United States as a whole. That embrace of MMT, in my opinion, is a nightmare. For the stock market, with valuations in the tech's gone berserk, and I talk about this in a video that we did on Thursday that we're going to put out there for everybody to see. So I think it's a really important look at the technical side of valuations on the 10 or 11 high-tech stocks that have been driving the market. You got to watch that video. The only thing that can end this flow of stimulus, funny money, would be much higher interest rates and much higher inflation. It might be that this action that we're seeing in the bond market might be pointing to an anticipation of that right now, with the long end of the market acting very, very weak. We believe that if that does happen, and we do get these big upticks in interest rates and inflation, that at that point the investors and maybe the Fed won't be able to ignore it. Clearly, that's not here yet. But watch for that. Watch the bond market, really. I think it's in terrible trouble. And I'm going to show you in the short-term view that there is a breakdown there on the short end that is setting up for some significant declines in the treasuries. And also coming in the short-term view, we'll talk about the stock market, of course. There is very, very poor breath right now in the market. As we see, a lot of the updates have had actually more declines than advances. And that could be a little bit of warning that we see in the stock market, that we expect to be now a smaller correction than we originally anticipated maybe at hand. So we're going to take a look at that also. For those of you that are implied volatility option traders, I want you to note that the VXN, the applied volatility in the Nasdaq, is starting to pop. And that could also be a signal that the leadership of the techs is going to turn to the downside, at least for a temporary blip. That's what we think now. For the stock market for the week, stocks gained solidly, depending on which of the major indexes you want to look at, 2.5% to 3%. The Russell, much weaker, only up about 1%. The bond market, the 30 years down 3 points on a very, as I say, very weak Treasury market, with the 10-year yields popping 8 basis points to 72 basis points. They were threatening that 50 basis point level just a couple of weeks ago when we said that looked like it was the end of it and we were about to see yields start to move up. Gold market up about $30, silver up about 90 cents, and those are all movements that are occurring based on the dollar declining 0.9% for the week, and all of that around the Fed policy change, where you go from extremely stimulus, QE infinity, to some level of madness that I can almost not explain. Oil gains about 60 cents on the week on that, and you got to wonder how long oil can wait before it gets any kind of a significant uptick under this inflationary scenario that we seem to be starting to look at. That's it for the opening. Please do consider going to the askSlim.com website, explore our website, subscribe to us on the YouTube. If you like this video, give us a thumbs up. And then you can click on that bell so you get notifications on when we put out the videos. We're going to probably put out that video that I told you about the tech stocks at some point soon. So you want to click that bell and get all of our videos when they do start to come out. We put out a lot of clips every single week, so please take advantage of that. Go to Twitter, follow us at askSlim.com, at askSlim. And for more info on memberships and for a special that I'm going to show you coming up towards the end of the show, write to Matt at askSlim.com. Matt is our COO and just a great analyst on his own, and he will send you some important information. Write to Matt at askSlim.com. Okay, so we're going to jump really quickly into the short-term view for the coming week. We look at 5 major markets. We're always accountable to what we said in the previous week. We look out at 2 to 3 weeks in our short-term view and project out there. What we're looking at are price levels at cyclical rhythms, the patterns in the market cycles, support, resistance zones, and also, we think they're going to go up or down. There's like 3 or 4 different ways that we rate ourselves. The previous week we were about 85 or 90%. This week we dropped off. We're about 60 to 65% accurate in our analysis, and I would say that we try to get an average of over 65%. A lot of people rate us by our stock market calls, which have been probably the weakest of all overall. So make sure you look at all of the markets that we talk about in here, and I think that you will find that we bring some great information. So we're going to get about 60 to 65% accuracy for the week. What we missed was gold, which had a smaller dip than we expected. The bond market, which we expected to get a selling opportunity on a rally, and it didn't rally. It just went straight down, even though we were negative in there. So we get a good amount of credit for that. We get a little bit of credit for the stock market in that we thought it would pull back and then go up again to another higher high. Well, there was no pullback, but it did make the higher high, and we said that, well, I'll save that coming up for when I look at those markets. Let's take a look now as we look at the light crude market, and we get into the first of the 5 markets we're going to look at. Again, we're looking at short-term analysis. The key things when we look at this is what we want to pay attention to is momentum. So this is the slim ribbon, which gives you the momentum indicator, and this is green. This is positive when all 3 of the moving averages are set up in a positive configuration. So it turned positive way back over here at about $29, and it rallied all the way up here to about $42. Really good. And when we look for confirmations using the projection oscillator, and when it gets oversold, it tells you that there are internal corrections going on, and you get buy signals. These are either signals to buy or to add, or just confirmations that the upward momentum is continuing. And you keep getting higher highs and bullish cycles. These are cycle brackets for those of you people that are new, and these are the way the cycles actually traded, and you could see the rhythm in the market. This is a swamped cycle. This is barely able to correct whatsoever, and then continues to move up. So we're 4 days into this new rally over here. We kind of think that for the next few weeks we're going to get a little more upside in here, and then we're going to move down. We've raised our upward target by just a few pennies, around $44 to $44.25 up in here, and then there's an intermediate pattern that is suggestive of a bigger correction that we'll be looking for somewhere between $39 and $38. That is, we've raised that target in there based on the stronger patterns that we see in here. But short term, what we look for is some continued attempted upside in here and then moving down. The sum of the evidence is intermediate correction is likely. The whole sector really points, that's with gasoline /RB and /HO, to some correction coming down into this mid-September period. And that's, I think, the influence of both products and the light crude market is going to continue to give it some corrective problems over here. Now, getting out over here into September, it's going to set up a more positive scenario, and that might be when oil is able to get above this resistance level that we've been looking at right over here, which at this moment looks kind of formidable. So a little bit more upside in here, and then getting into the correction is what we're looking for in the light crude market. The next thing we're going to look at is the gold market, /GC. So here is gold coming up, hopefully. And let's look right in here. We'll just take a look at these two harmonic families. Now, interesting in gold, this harmonic family, you see this big blue cycle bracket right over here. It's really made up of like 4 minor cycles that are in there. And you can see the minor cycle patterns here. And how they form right in here is very clear. And this has brought some pretty good accuracy in our analysis following these beautiful patterns. Now, this dashed line is silver. So it's interesting because the silver and gold cycles are slightly what we call out of phase. So that means that sometimes they fight against each other. So right now, you can see silver made a low right over here, gold is making a low right over here, and they're probably both going to get some lift in this period right here. So we were looking for it to move down again below the 1900 area, potentially down here to 1875 to 1830. The time period is really passing for that, and if I take a little closer look right in here, you will see that that we're having this big, we had a good size down day here, and now we're getting a bigger up day right in here. So there's a potential that you're going to have a couple days where it pulls back again, but not likely to the level that we thought. So this is showing more strength. Now, momentum is neutral. It was positive in here, and it went neutral. When the slim ribbon gets flat, it kind of lays on top of each other, it shows you that momentum is not developing. Now, we're getting this big up day, and it's not enough for it to develop yet. We might get a couple of more down days in here where investors kind of throw them away. It really depends if the dollar can get any up days, and it looks really sick. And then you see we have this move projected up again. So this is the next projection. This is what we call the most likely projection that we see in here. And you'll notice the silver market correction down over here. We think silver is this action is probably going to keep gold from being able to take off in any kind of a significant way. And then there's a nested area. That's those gray areas that you see down on the bottom. And that's where these cycles kind of come down together right in here. So it looks like there's more correction out into September. This looks like a range-bound period to us, 1900 to around high 20s right in there. And if you can buy it around 1900, I think it's a gift. And if it just runs away right up into those high 20s, near 2100, it would not be that much of a surprise. There are resistance levels in here. We're actually looking for this to really stall in this area of about 2025 to 2050, and then kind of back off again and give you another opportunity over here. Now, we're coming into what is this bigger rising cycle right over there. And I could be under anticipating the upside potential in here. I don't think that I'm being too bullish when I say it could only tick down under here close to 1900 or a little bit under that. I think that the patterns are telling us the power of this market. And I think the Fed actions are very clear. The Fed policy change where they want inflation to run hot, well, there's a potential for it to run very hot if they start really doing some nonsense. Well, they're already doing nonsense. But then, so I think breaking out has a much better chance than breaking down. I would make a breakout 4 times as likely as a breakdown underneath this 1830 area. So we're really in a period where the question is, how much of a rally, and will it stay in the range that we're looking at, and be nice and quiet until the real favorable period comes out into late September and into October, or is it just going to take off and explode right now? So you can tell I'm really starting to feel more positive on it. I love it when you get these kind of cycles where corrections are due into areas where there's some nested area and they can't fall. That means the buyers are there. and we're likely to see higher prices. For the next 3 weeks, we're going to look for maybe a little zigzag in here and then trying to get to the upside, a modest pullback again, and then potentially taking off on the upside right there. So that is a look at gold, which, as you can tell, we're quite favorable on. The other side of that is the dollar, which is very weak and getting weaker, apparently. We had looked for the dollar to kind of chop around and then break to the downside again. Well, that's actually what we got, and we thought it would get a little bit higher than it did, but into these resistance zones again, but it can't, and these are very low resistances. Look, well, where is it? Right here. You see that red arrow right in there? That right over there was where the slim ribbon said it was the momentum had changed to negative. And you can see what began to happen. And then you started to get these failures and sell areas right in here. And actually that sell pending became a real sell. And all of these have been great signals. And it just tells you the quality of this type of momentum analysis and the importance of it. I'm going to talk to more about the availability of getting some more of our momentum analysis in a moment. This is a great picture of how this analysis tells you the story. And of course, this is often inverse to gold. And now this looks like it's going to decline for the next 2 weeks. Well, if that's the case, then you know what's going to happen to precious metals. They're going to keep getting a bid. So we see negative action. We see a decline now. We're lowering it now to a target that comes off of the weekly cycle patterns that takes it down to 145. 91.45 is now our target down over here. Let me just grab this and put that in there where that intermediate support is, right around there. And so we're expecting it to come down and test that level right over there. Let me just point this back down to where that cycle point's right there. And you can see. So we think that any action in here is going to be choppy to lower, and that we'll see that potentially 91.45 level. If we get a rally again over here, it's likely to get you back into the slim ribbon, and then which tends to be resistance, as you could see, and then be moving down again. Potential range in here is 91.45 up to about 93.5. And if it gets to 93.5, I think it is a screaming sell. That the way to sell it would be probably to buy euro if it did that, but it sure doesn't look like it can. We're expecting negative action, that test of 945. Some of the evidence is that there is more and more downside risk that we're seeing, and especially based on the Fed policy. They want to keep this stimulus going at some extreme level. They want to destroy the dollar. I know they'll never say that. That's one of the things that they'll never say. But if they can get the dollar a lot lower, they can export our deflation. And if that's the case, a much cheaper dollar means that our goods will be much cheaper to international buyers, foreign buyers, and that's what they're trying to do. So they don't mind killing the dollar, and they just won't say it. Don't be surprised if you see the dollar lose another 10% over the next year based on their policy. So this is a really bad pattern. You can see this cycle low right over here. We had the note. This is a very early drop. It's low odds, and it's very, very negative when you have this rally and then break that low so early. That means this big cycle right over here has rallied and turned down already. I know for those of you that are students of our cycle work, they're going to say, wow, that makes sense. And that is just an outrageous thing. It is so weak, and the Fed is doing that. So for us to change our mind about that, you'd have to get above this level here of 94. And it would take something just, I don't even know how extreme change of policy for that to happen. I just can't foresee it. I mean, this is a very, very negative chart, and we're going to look for some of the evidence of very, very weak market to continue in here. Now let's look over at the bond market. Now, we talked about the bond market earlier in the show and how the bond market looks to us like it's about to punish the Fed, their indiscretions. So let's just, you can see the harmonic families in here. So this is a dominant cycle that we call it. This is made up of 3 small cycles, which we have marked off for you here to see. Beautiful clarity in those 3 cycles. This gets a little bit harder because it's squashed, right? So I just want to look in this area right here, and you could see the same thing in these cycles, in the next one, the minor cycle, the minor cycle, the minor cycle. And look what happened. It rallied, hit resistance, came down and broke. Momentum negative in here, sell signal right over here, right at that point, and then collapse, whack. And so now what we're looking for over the next few weeks is that continued downward movement in here, some attempted rally out over here, and then this cycle right over here is already in this downward configuration because of this breakdown. That says the bond market's got tons of trouble. Now, when I look at the timing right over here, let me just highlight that for you to see, that points to a low out into mid-October. The weekly or intermediate patterns point to the same thing. This breakdown that we see early is typical of what happens in a setup that says that the intermediate patterns are in a steep decline. Momentum negative in all time frames now. And that's the sum of the evidence that we're looking for downside movements. Our target right now is, we're trading at 174.25 on the 30-year. Our short-term target is 173.10 with a very likelihood it's going to fall to about just below 171, about 170.30 is that target. So very, very weak that we're looking in here. Some of the evidence, all negative momentum, all intermediate phases now pointing down, and a really negative situation that we see in the bond market. If it picks up its head and gets a rally, it's likely to fail. And we think some of the best trades are coming in here on the short side in the 30-year. So that's a look at the first 4 things that we're going to look at in here, the first 4 markets. And I hope that that was very informative to you, because we want to bring you the most informative information that anybody brings you. And we're going to let you see it. If you have not been an askSlim member before, this is the chance to get a preview. We're excited to announce that we're offering, for limited time only, an opportunity to get a 7-day pass to some of our most popular premium services. And this is by request only, and it's for a one-time use. So in order to get that, you have to write Matt at askSlim.com. What do you get when you get the 7-day pass? Well, you get the Stock Index Report Daily Snapshot. This is a really, really well done a report that's sent to you on the S&P 500, the Nasdaq, and the Russell with technical insights, annotations on the 2-hour and daily charts. We give you key levels and custom indicators, and you're going to see some really great graphics on there that gives you a great sense of the conditions of these markets. In addition to that, you're going to get our Stock Index Report Intraday live stream. These are live charts. You don't need to have any special platform at all. We're just going to send you a link every morning on these customized charts. You're going to get key support, resistance levels, and anticipated breakdown levels and acceleration zones. What that gives you is the ability to have the bigger trades, to be able to hold on to positions or add to positions at key levels and really change the relationship of your wins versus your losses. It's extraordinarily good. We have rave reviews on people that use that. You will also get our daily trade ideas. This is for our level 3 members that get this, and you get to see the entry ranges, the projected target zones, and the suggested reevaluation levels where we really have to look and say, wow, this trade is not going as we expected, and then we look at it and let you know about that. That includes that we send out notices on these things. It's really fantastic in there. So you're going to get all of those 3 great, very premium, popular premium services that we have. You don't need a credit card at all. Just write to Matt, but there's more. You're going to get our Slimulator ranking system. This is a proprietary askSlim charts with cycle and momentum analysis for 84 of the best traded stocks, ETFs, and futures. You're going to get our sum of the technical evidence output with suggested directional bias in there. And you will see our directional bias indicator that's in there. You can sort on this. This gives you just the best stocks, ETFs, indexes, and futures that you'll ever want to trade. You really don't need a bigger trading universe that is in the Slimulator ranking system. And for those of you that are position traders, momentum traders that hold for longer term, or investors, the Slimulator Momentum Tracker. You get a clear picture of momentum conditions of over 1,000 stocks and ETFs available for your review in multiple time frames. Unbelievable amount of sorting you can do there. There's some charts in there that shows you when something and the dates that something turns to a positive momentum or negative momentum. You get such an unbelievable feel for the stocks that or ETFs that you're really interested in. You're going to find that to be a phenomenal app that you get. All of that, unbelievable. 7-day pass, no cost to you. This is a one-time usage pass for those of you that are first-time users at askSlim. First time you're here looking at this stuff. You do not need a credit card. Just write Matt at askSlim.com. He's going to send you back an email with a link to get in there. 7 days is over. It's going to be gone. You want to stay, then you'll write him again. And say, hey, you know, I want more of these. Let me look at this for a while, and you may become a member. So that's why we're doing that. We're letting you see our very, very best stuff, and you're going to find it absolutely phenomenal. And of course, that includes our look at Future Speak. That's our analysis of 24 different futures contracts that are just incredible. So you get all this. The askSlim daily snapshot, the SIR live stream, the trade ideas, Slimulator ranking system, the Slimulator momentum tracker, and a peek at our Future Speak show. All of that just for free, no credit card necessary. Write Matt at askSlim.com. All right, so now we're going to get over into the short-term view for the stock market. We only get a little bit of credit for this one today because we were looking for a dip in the stock market. And that dip never came. We thought it would dip, it would rally again to new highs, and then would get into a much riskier period in the next couple of weeks for the brief correction now that we're looking for. So let's take a look now as we switch over from the bond market to SPX, the S&P 500. Busy chart that you can see in here. Again, we want you to note that we are looking at cycle analysis. We combine upward momentum that we see in here that's been leading the market to the upside with our indicators down over here on the projection oscillator. This has been incredibly bullish for this whole period of time against my longer term cyclical analysis, which has looked for corrections. It just has not been there as it's been driving up. What we get is what we call swamped patterns, where the corrective periods that you see right in here only bring you brief little dips, and this is about the strongest I have ever seen it. Here we are now, 7 straight up days that you see right over here so far, and this is that 2-week period that we're looking at right over here that we think brings the most risk. I don't know if it aligns with the Apple split, or the Tesla split, or whatever is going to get them just tired enough to give you a correction in here, but nothing like we expected before. This green dash line that you see right over here, well, this is Apple. So I overlaid the Apple pattern in here because Apple has been of course, giant market leader. It's the biggest weight in so many of these indexes. And this, you can see it coming down in the same time frame right over here. So we think that Apple's going to get a brief move to the downside. We think that the techs are going to follow. The Nasdaq is going to have a brief move to the downside with that. And here we are into these 2 weeks where we think is some downside risk in here. Our targets have been really raised a lot based on what we're seeing in here. Let me just get a real close look right in here so you can see. We have these minor supports right in here that come off of this minor low. We have the short-term confluences which come off of the multiple of lows in here, and that really makes for the support. This is the support from the weekly, which has been rising, and where our original targets were, which were much lower. Right now, what we're targeting is a decline over the next 2 weeks that gets us down to somewhere between 33.90 and 33.55 here on the S&P 500. That is not much of a break. We're really looking at only 3.5% to 5% over the next couple of weeks. We've showed multiple times the recurring patterns that line up for this to be a low period in here, in other words, a decline that brings you to some bottom, and then again the market moving up. So we think that this 35.01 high right in this area, if we do get this correction, then out over here as we move towards the election, it would be surpassed again as we get into these positive periods again. Some of the evidence, all momentum is positive. It has been that way, it remains that way. The tech leadership, we believe, is about to give way. Now, it's important to note that we have a rotation going on, and we think that that's likely to continue. But the breadth figures are really getting weak overall. And with a bid coming in the VXN, the implied volatility in the Nasdaq, we think that that's kind of a signal that we're probably going to get this correction that we've been looking for, but to a much, much higher level than we ever originally thought. We would guess that it would be kind of sharp, that investors would get nervous when it comes, and that's about the only way that you probably can get a decline, is if you get a brief period of a shakeout, some nervousness that we do not think will be the beginning of anything significant, and that we will get to higher levels coming out into the October timeframe. So that's it. That's what we see. Downside 2 weeks coming up in here, and that this upside surge in here is kind of everybody getting all in for the moment, and maybe a little bit of a shakeout that we see coming up in here. That is a view of our short term on the stock market. Don't forget, write Matt at askSlim.com. You want to be able to take a look at our most popular services. That is free, absolutely, for 7 days. You get that pass, and you'll be able to see all of these great things that we put out. And then you'll want to be a member like so many other people that are askSlim members. Your success is our success. And that's what we want to do, is give you more and more tools to get there. I want you to be incredibly careful, because it is so crazy out there. And I'll always see you next time.